The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour. This is the third hour, in fact, because I saw up with Steve. Get well, Steve. Wasn't able to do a show today. And then I did Tom and Steve's show at 10 o'clock. I went through a number of aspects of the ChapmanWave based on the charts that we are following. And now we got my show, which is the Tiger Technicians Hour, Monday, Tuesday, Wednesday, Thursday, and Friday, 11 o'clock till noon Eastern Time. What I thought I'd do in this particular hour is I'm just going to give a quick review of what I was looking at. Very important that the Dow holds 12,870. That's the 200-period exponential moving average. What I said earlier when the Dow was actually still only down a little bit was that if in the first hour before we started the day, what I said is if this is what's called in the ChapmanWave, this particular candle, this is the daily chart, I'll expand it. If the price goes, this is the ChapmanWave Roman candle, one of the techniques I've developed. If the price goes halfway into the wick, there's a good chance not only will you test the bottom, but you might just nick it nick it below. That's what you got to be careful of. Well, yesterday's low was 12,900, and today we've gone to 12,909. So we've gone towards the bottom. The level that I'm looking at in the 200-period exponential moving average is, in fact, 12,906. So far it's holding that. However, put into the context of what we're looking at, let me just run the numbers. What is that? What is that? Oh, all right. Dow's down 36 at 12,930. S&P's down 3.30 at 1402. Comp Index down 4 at 2972. Gold is down 410 at 1745. This consolidation for gold's been pretty good. I showed the chart a little earlier. Made a peak B. I think we're forming the second arch. I don't see that much more yet. I know there are a bunch of things coming up the next day, full moon and all that, but that's the way I'm seeing it right now. So silver's down 7 cents at 34.05, and we've got a high-grade copper down 80 cents at 3.52. Now, that's kind of important to watch. So far, it's holding okay, but we call it, instead of a high-level consolidation, so far, this is a low-level consolidation. We're going to have to watch the parameters there. Silver's down 76 cents at 86.97. Bonds are up 0.6 at 150.25. I'll get to that in a moment, but first let's just go back to the Dow chart. The stochastic, after a move like this, it's really okay. It's not great. It's a 56%. I would have preferred to see it at 72%. I would have been gung-ho. I would have said, okay, all shorts are off for now. I only want longs. But right now, I'm quite happy to be looking towards it. We don't have any shorts. We've taken profits in our shorts in the opening call. It's my daily service. I'm looking to get back into shorts. Regardless of what the market does, there are some stocks that are just struggling. That's number one. Number two is there are a number of stocks that are doing very nicely on the upside in this breakout pattern from the bottom. They haven't yet, one or two have gone to buy modes, but most are just in buy signals. I haven't yet got confirmation in the ChapmanWave to a buy mode. Well, how do you go from a buy signal to a buy mode? That's what I will be going into great detail in. If you want to learn how to get into the stock, where to put your stops, how to add to it, how to subtract, how to lightly test it, and then add to it, using the peaks or the troughs on the downside in the ChapmanWave is a technique that really can help you. It just fits in with any, a robust technique means that you can apply other techniques to it to add even more veracity to it. So December the 6th and 7th, Thursday and Friday, I'll be giving a live all-day workshop, just a live webinar. Anywhere in the world. If you can't get to it on that day, you can you'll have it for a month on your desktop. You can just go over it and over it. So consider it as your present, your educational. I couldn't make it any less expensive. It is just so, I could work at McDonald's for those 2 days and earn. This is for you. This is to be able to get out I'm an advocate of the ChapmanWave methodology, the waveform that never sleeps. I want you to learn as much as you can. So please go to the front page, check it out. I'm telling you, get my CD introducing the ChapmanWave methodology. The sooner you sign up, I'll overnight you that CD. You'll have it there. That's what you need, because that's your core. You'll have it forever, that CD. And I promise you, this is the one promise I will make, is that CD will never go out of fashion. I don't care what you do in terms of technology. You will always have peaks and you will always have troughs. And that's what it's all about. So, think about it, a 471-page slide, a PowerPoint presentation you get for thrown in. You get a webinar that I want you to go over on moving averages, throw it in. Discounts, we've got Tiger Dollars coming up. You can use your Tiger Dollars. I mean, I don't know how to make it. Yeah. I love teaching this stuff. You know that. All right. So let's go to the ChapmanWave right now. Here's your V-shaped formation. It matches this is what I showed subscribers in my opening call this morning. I showed them the parallel between that left side V-shaped pattern and what's shaping up here. There you took 1 day to consolidate, but it was much bigger. Here it's taking 2 days to possibly do the same thing. What will give me the buy signal to buy mode in this particular instance? If the Dow goes to 13,011.46, it starts leg B. Not good enough. I need a solid close into that ugly candle of the 7th of November. That huge candle opens at 13,228, virtually the high of the day, closes down. It hits 12,876, closes at 12,932. I want to see a close somewhere into where the 9-period exponential moving average, where it went under it. So somewhere in the 13,135 area. I'd even say 13,055 to 70 would say to me, you can go to a buy signal because there should be a C and a D. That's the area. I want it up, up, up. I want it above peak A. The higher you go above peak A, the more guarantee you've got of at least a chance that you can go to a C and a D. But then the stochastic has to get over 80%. So, this is what we're looking at. Dow right now, holding nicely on the 200-period moving average. The next level is 12,871. That's the 9-period exponential moving average. Major support. A close underneath 12,830. And I'd say, be careful. We could have a single leg A up here. So far, it doesn't look like that's going to happen. Now, nice cup of English tea. From the 12,471 low on the 16th of November, we've had almost the same kind of rally that you had, which took you to peak B back on the 11th of June, from the 6th of June low of 12,035. So far, there's a great match. But when I look at this, I'm also looking at other things. My Dow Quartet, the GE is acting quite well. Leg B up, done very nicely. I would prefer to see GE in the 20, above that candle right there, above 2130, the candle of the 9th of November. As soon as it does that, I'm going to say, great, now it can try it for the 2177 level. And it's like the XLF. I didn't even speak about that. I meant to earlier on. The XLF is in leg B, possibly peak B right now. But it's doing very nicely, but not good enough, because I need to see the stochastic, the slow stochastic. So it only gets a plus sign here, not the up arrow. I want to see the slow stochastic, which is a 62%. In the 80s, if it gets to the 80% level, this XLF is going to try for that gap high of the 1594 level back on the 7th of November, and the previous day the low was 16.01. So it'll try for that gap. But if the XLF starts to fail and goes under 15.56, I say be careful. So those are the things I wanted to cover right. Oh, TLT. The TLT is holding very nicely. It's in this rectangle formation right there, this consolidation area. If the TLT starts to break down and at any point in the next week goes under 124, I suspect money will come into the stocks. But let's go back to one of the techniques that I've used so often. For my subscribers, my opening call has the overview section. And in the overview section, I think I've got it right here. Let me see if I can get it right. the overview section says that there's a peak D made in the 120-minute chart of the Dow. It's above the trend line resistance, but just barely so. The 13,156 is the 200-period exponential moving average. I suspect there will be an attempt over the coming few days to try to get there, but not if the 12,800 level support goes. 12,830 to 12,800. The volatility index did bounce. It bounced to 14.77 and went to the 15.60s. But you know what? Unless the volatility index goes into the 1620 plus area, I think that this market has a chance to see this as the low volatility index, the VIX, a low VIX, is telling me it's buying pressure. I don't go with this greed and fear business. I just can't do that. Not for the volatility index. It's buying pressure and selling pressure. I've got to keep it simple. I've kept it simple for years. It's been a fantastic indicator for us. So far, I'm staying with that. And the short-term trading index did give a sign yesterday, but it wasn't strong enough to say that, okay, there could be a rally attempt. There was basically one this morning, but this is not a signal. This is not a signal at all. So I have to treat it as a neutral. But the other signals have given fantastic. I think it's 97 to 98% accuracy. This particular, find me another indicator in the world that has this indicator that has a 98%, 97. Let's call it a 92% accuracy rate. It is an amazing thing. I discovered it years ago. But I took Richard Arm's wonderful index, the short-term trading index. I do not use it at all like Richard Arm's. In fact, I'm invariably in opposition to what his comments are. And I'm sure he uses it successfully in his way. Maybe he's looking at different time frames. But I just have found that the way I've used it has developed its own set of parameters. I'm just sticking to those parameters. At some point, I'm sure it'll start to fail. So far, it's done very nicely. So that gave us the different levels to watch for buying pressure within 2 days, or a sell signal, what I call the rug pull for the following session. So it sounded quite accurately. Now, I wanted to just go through those to show you that I'm expecting another arch formation in the very large arch that was made in the daily chart I'm showing right here in the Dow, and again in the S&P. So this is a bounce. We have to call it a bounce. It could become something much greater because the S&P did not take out any of the levels on the left side that were key supports. So that's strength. But I'm going step by step. I want to see where we are on Friday. If on Friday the Dow is anywhere in the 13,100s, I would consider that really positive. If on Friday the Dow is under 12,700, I'd say, uh-oh, be very careful. I'm still getting signs to say that there are so many more stocks that I'm finding that are looking as great shorts, but I'm also finding stocks that look pretty good on the upside. So it's a bifurcated market as always. I'll be back. I'm going to take your calls at 877.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
Millionaires are made every day. The fact is, living your dreams is possible. Someone, somewhere is going to get rich. My recommendation is, let that be you. Each day, someone is making the decision to better themselves and creating a plan to fulfill their financial dreams. Let that be you. The key to turning dreams into reality is to take massive action. Let that be you. I'm Steve Rhodes, co-host of the Money Master Show with Tom O'Brien, seen daily at TFNN, and I can help you with your journey to great wealth. I'll show you how to create the ultimate financial edge, a set of tools, insights, and strategies that are part of my daily newsletter service, Mastering Probability. You'll have direct access to me by phone, email, and my private library of trading and investing secrets for 30 days with an unconditional money-back guarantee. I'll take your trading to the next level. Click on my name, Steve Rhodes, on the homepage at TFNN.com and turn your dreams into reality. Mastering Probability, folks. Let that be you.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Wealth Management. Simply picking the right stocks is not enough. Research has shown that choosing the right proportions of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley believes a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what an asset allocation and a Morgan Stanley Wealth Management financial advisor can do for you. Call Angela O'Brien, First Vice President and Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Wealth Management, LLC. Member SIPC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
Hi folks, Basil Chapman. We are back. This is the Tiger Technicians Hour, and I'm just finishing up the chart right now. It's a monthly chart. Okay, and I am ready for this segment of the show, and we're lucky to have Ilka from Boston. Hi Ilka, how are you?
Great, Basil. How are you?
I'm very well, thank you.
How was your Thanksgiving with the family?
Oh, it was really good. And, of course, they are so cute, the little grandkids. That's their job. I think
that's wonderful. Before we go into my stock, I do want to say I want to give a little plug for your seminar because I have taken several of them, almost all of them, and I basically trade off of your system because of the availability that it has. It's just unbelievable system, and if anybody has a lot, there is a lot of questions always about ChapmanWave, and I continue on learning, and as you know, we all learn throughout using it, but it is a wonderful system, Basil. I have to say it's something that I've never seen before. I use it with a couple of additional things, but most of it I trade off of your system.
Well, I do appreciate that, and I always love having you in my seminars, and you're an excellent student, and thank you so much for that. I appreciate that. It's very nice of you. Thank you. So you want to look at?
Yes, it's ADY. I have this. I have had for a while. It's now beginning to move a little bit. I'm more concerned with the longer-term charts, not the small time. This is something that I have a very comfortable entry in it. So I'm not worried about it unless they go out of business all of a sudden. But
so what exactly do they do?
they are in dairy, powdered dairy, milk formulas, I think, and some additional things with dairy related. But this is a Chinese stock.
Ah, okay. I wondered about this. I'd seen the name. I'd seen the symbol before, and I kept thinking it had something to do with the dollar, and I always meant to look at it, but this is the first time. I've just done a ChapmanWave study, and I've got a little surprise for you. Actually, I'm going to ask you a couple of questions.
Yes.
Folks, we're looking at ADY. It's trading at 6.85. Fahy, I'm not sure how to pronounce it. Fahy International. Let's go with Fahy International, F-E-I-H-E International, and as Ilka says, it is a Chinese powder milk or something, whatever it is.
Dairy, they're baby powder, baby.
I remember seeing this. I saw this a couple of years ago. And I remember looking at it, someone had brought it up, and I thought, wow, I've never heard of it. And also there was this whole big scare about powdered milk, but it wasn't them, it was someone else, and that's why it came up. Now, this is a stock that's gone in a beautiful cup formation from a low of 5.30 back on the 17th of September, and that has actually, that's what's very interesting about this, is it's gone from that pattern. It's not the rectangle. It's really a beautiful cup formation. It is retesting the 6.88 high that was made on the 3rd of October. Today's high is 6.85. It's 3 cents away. It is 4 cents away from what I would call a leg C. You could be conservative by calling it C, but actually more aggressive would be calling it, oh, no, wait a minute, this is, an overlapping wave.
It is overlapping, yes. It's that's what I have, overlapping.
Okay, so let's just discuss this, because I'm all about education right here, and I want people to know what we're looking at. Folks, there's a technique in the ChapmanWave. It's right here in the CD. It's called the overlapping wave. It's in Chapter 16, Chapter 6, right there. There's a technique that I developed years ago. This is one of those trial and errors, the ones that cost you a lot in education, and you finally say, oh, that's the technique. What happens is there's a waveform that starts, and it goes very often, it can go to, I'm just looking to see how, there it is. That's a beautiful one. This is on slide 324, Boeing, back in July of 2004. It goes, very often it goes to a C, but it can also go to a B. And then what happens is it pulls back. It doesn't come back to the beginning. What it does is it pulls back, and then underneath the previous peak B, it has another little, what I call a gray A, a different color, and then a gray B. And then when it goes past the previous high, and in this case, we're looking at the previous high of 688, that will be new leg C. And what it does, if you think of the highway, if you think you're on your expressway, no, you are going onto the expressway and you're on the subsidiary road, as it forks and it comes together, the Y comes together and you're going to join up, you want to accelerate so that you are ahead of the traffic. That is important. Well, what happens in this particular instance, when you take out the left side with this overlapping wave, both of them are now in C. It is so powerful it invariably goes to a D. Oh, I'm going to talk about that. And then I've got a ChapmanWave flat-based restart, which I don't know if you saw in the monthly. I'll be right back.
If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. You've heard Tom O'Brien on the air, and you've seen him on Tiger TV, as well as being featured as a regular CNBC guest and contributor, and now you can have access to his expert trading advice each morning through his daily trading newsletter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, gives traders, investors, and money managers a thorough strategy for trading stocks, options, and indices every market day. Market Insights comes out each market day before 9:30 a.m. and provides traders with Tom's daily commentary, opinion, and specific trade recommendations on the markets. Using advanced Fibonacci methods, volume indicators, Gartley patterns, candlestick charting, gaps, and market timing, Market Insights will give you specific trade recommendations including entry, stop, and exit prices. The summer is over and traders are back. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Hi, folks. We are back, and in fact, we are looking at ADY and some very interesting techniques within the ChapmanWave framework that we're looking at. So the 120-minute chart has another technique, Ilka, that I've been working on for about 6 or 8 months, and that is how to identify a buy mode that looks like it's restarting, but in fact it's already accomplished a whole bunch of the aspects that we need. And if you look at the 120-minute chart, the low of 615 at 15:30, 3:30 in the afternoon, on the 1st of November, started a peak A, then it pulled back. That pullback then started another little mini peak A to B, and even though it went lower, the original low of 6.15 was kept intact. So instead of going to a C minus, everything about it said that you could in fact go to a peak D using the same methodology by identifying the lowest low bar and using that. Now what's happening is we've got a brand new, I just want to double check I haven't missed anything, 43, 43, 43. There's peak A, B, C, D, and now we're in leg E to the upside in the 120-minute chart. This very minute, as we're talking at 11:35 on this Tuesday, November the 27th, you've got a very powerful leg E, and the 9-period moving average is at 670. The MACD is still strong, and the stochastic strong. The on-balance volume is the clue here, and that says there should still be further to go on the upside. The weekly chart has the potential for another A to B overlapping wave, but it doesn't have to do that. If you look at what I've done in my, if anyone's looking at the charts, you'll see the chart in the middle here. That's the weekly chart, and that has, in fact, an inverted ChapmanWave Roman candle, and it says that if at any time in the next coming weeks, ADY, Fahey International Inc., trades at $7.74, anywhere around, but give or take a 2 cents up or below or above, there's a really good chance it's going to work its way somehow or other to the very top of the candle towards 930. But 974 is a 200-period exponential moving average in the weekly chart, and it hasn't been there. It hasn't been there since it broke down back on the 7th of May, the week of the 7th of May, back in 2010. The way this is looking is it's trying to make that a magnet level. I like the fact that you're looking at this as an intermediate term, and you very well know that if this starts to close and trade below the 530 area, it's going to be a failure pattern.
My stop is, exactly.
And what's important is that the monthly chart, if you go from the bottom, it's made a peak ABCD to a high of August of 2005 at 845, pulled back for 3 bars, had a beautiful doji candle, started a brand new peak ABC, but that low of $4.95 is a ChapmanWave flat base restart, because all the price movement going to the D kept pulling back but never broke under it, and finally it made that leg D, that spiraled right arm extension to 44 round number. Oh, there's it, round number high. 44 round number high. Second time today we've got a round number high. At 44 round number high, it makes its all-time high. That's in June of 2009, and it comes all the way back to a low of $2.22. And now it's in leg A. It's made a peak B in the monthly, and there again, the 200-period moving average at 6.84 looks very much like a magnet line. So I think you've got yourself, a percentage-wise, a really nice trade here.
Wonderful. And a lot of ChapmanWave methods.
There's just a slew. Now, here's the other thing that's very important. This is I meant to do this. I almost forgot because I was busy reading what was asked in the den. In the den, the question is, what stock are we looking at? We're looking at ADY is the symbol. It's trading at $6.84. And there's that rectangle formation, and that's where it's trading. I suspect that it's going to try to work its way towards... It might struggle to get above $7.30 towards the 750 area, and then it might take its time. But there's definitely a rectangle formation that says this is the trading band it's in. It's trying to work its way to the upper part of the trading band. Wow, nice pick.
Thank you very much, Basil. Wonderful. It's always wonderful talking to you.
Thank you very much for calling, and thank you. I appreciate that, Ilka.
All the best to your family. Bye-bye.
Thank you, and same to yours. So, folks, we've got, this is just a very good example of those techniques that we were talking about, and this is what I'll teach. I mean, nothing here was very difficult. It's all step-by-step motion. Look, there's the cup formation, ADY. Let's go to our next caller. We've got Freeman in Dallas from Texas. Hi, Freeman. How are you?
Hey, Baz, how you doing? I wasn't listening to the show. I usually listen to the podcast later on. I don't know if you talked about Zillow already, Z?
No, I haven't. But
yes.
There's something going on. Do you have to? Can you wait, or do you have to go? Will you have to listen to the archive?
No, I can listen right now, but I usually listen after the show.
Okay, let me explain something that happened with Zillow. It's really unusual in the ChapmanWave to have a stock that comes out as an IPO, goes to peak A, B in the monthly, even a C, and then fails. It would have almost made it if the 44.23 high of May of 2012 was taken out in July of this year, even by 1 penny. For just 44.23, it went to 44 round number high. Isn't that funny? We just spoke about a 44 round number high in ADY. And if it just went to that 1 penny, then it would have eventually made a peak D. Well, this hasn't. So failing at C is a very big negative. Now, I've had a lot of conflicting reports about Zillow. I happen to use Zillow a lot. I know my son does when we're busy looking at different real estate, whatever is going on in Brooklyn, the different areas. I do know some real estate agents who do not find it as accurate as they would like. I think they do a fantastic job, but that's not my business. I'm really the outsider looking in. So I'm saying, what on earth happened? The weekly went from 21.22, the low of the second week of the second week of December of 2011, went to a beautiful peak D, 44.23. It pulls back and then spirals higher to a peak E, right arm extension. Folks, what is a right arm extension? I just spoke about that. The right arm extension is where the price goes up without the veracity of one of the techniques. In other words, this particular chart that I'm showing on slide 342 of my CD introducing the ChapmanWave methodology, which you get for free if you take my webinar, 6th and 7th of December, Thursday and Friday next week. Look what happened. You go to that C and it's a C minus, but in fact it really was an E, because the stochastic failed to hold above 80% and the MACD didn't make anything close to the high before. So that said to me, watch out with Zillow. I was shocked. It made 46.86 as a high in the week of the 21st of September. And it makes, this is the A to B equals C to D, or even more. It's like a butterfly pattern that comes way, and it did it with volume, which makes it a tiger butterfly, all the way down to the 23 round number low of the week of the 16th. Now it's trying to rally, and it did not get below the 21.22 level. So the 23, let me type that in, 23 round number low. That's very important. You close below 23, and it's all over. You're going straight down to 21.22. But that gap, and that was an earnings gap. So I'm beginning to think that it was money. It was the, how can I put it? That it wasn't the service per se. I'm just guessing. But in fact, it was, I'm just typing this in here. So there's D, an E, and you got yourself an F, trough F low, and now you've gone to leg A and a little mini B. Okay, I think it's their economic plan. It is their plan, not the economic plan. It's their business plan that is a problem, because I think they do a fantastic job. So something is wrong with this plan. That they couldn't monetize what they've got is shocking to me. So I definitely wanted to look at buying Zillow. I thought it was absolutely going to be great, and I when it was sitting, before it broke down, when it was sitting on the 200-period moving average and kept treating that as a hug that line, it's right on the line, even closed on the line so many times. I thought, wow, if this can break above into the 39, I wanted to see it back at 40. I was prepared to buy it on a bounce and give up something. Thank goodness I waited, because it gapped down. Now, what you'd be looking for is a trade into the gap, correct?
No, I actually got in 3 positions, average in at 23.70, and I wanted to give myself $1 stop for the week. But when I was looking at the daily yesterday and today, it seemed the slow stochastic was going up, while it's the price was going down. So that confused me a little bit.
So what I talk about when that happens is I talk about wheel spinning. What is wheel spinning? Wheel spinning means that you've put your foot on the accelerator and your wheel is just turning as if it's in snow or sand, and you're not going anywhere. You're usurping, you're using up much needed energy, and that's not good. This is what I'm looking at. I think that your entry point in the 23s, that one is good. What I would say to you is, if it closes, or if it even sneaks just while you're not looking, you'd have to put your stop in. If it gets to 24.95, at least one of your positions you should take off. What I would do, I wouldn't add to it, but I would have said, if you had 1 or 2 positions, I would have added to it if it got to 26.67, somewhere around 26.60 to 26.67. Why? Because that would have said, now it's working with the technicals, and the first level of target would be the gap down high of the 29.19 level back on the 6th of November. And that way, you've got that safety factor, because you're playing higher highs and higher lows. At this point, you're not yet 100% sure. Why? Because you've got an engulfing candle today. So far, it's made a higher high. 26.34 was a high yesterday. 26.60 today. Hey, that was great. But all of a sudden you say, wait a minute, the low is 25.21. The low today is 25.10. Uh-oh. So I have to go to the 120-minute chart. That's not telling me very much at all. So I want to, in the webinar that's coming up, I want you to be also talking about how gaps can get filled and how they can turn out to be extremely positive as opposed to the negative that one would imply from gap downs. But you know what has to happen? It has to very quickly start to turn the gap, the low of the bar that gapped down, sorry, the high of the bar that gapped down, 29.19, it has to turn that into a key support level. And as soon as it does that, you say, wow, this thing can really go back to the high, the low of 33.90, which is the low of the candle that before it broke down on the 5th. And then you want to go to 35.15, which is 200-period moving average back there. But at this point, the weight of evidence says there's something wrong with this company. I don't like it. I'm very unhappy that it did this because it had everything. Didn't it have everything? Zillow. I mean, you can drive. You put it on your cell phone. You can just drive past every single house. It tells you about every single house, last sale, the valuation, taxes, the works. So I think they've just not been able to monetize a great innovation. So that says to me that this is a stock that needs to prove itself. So here we are. So you've got a couple of positions, a few positions. I want to see this very quickly take out 26.60, the high of today. If it does that, I would keep the core position and raise it to a profit. I would take your second position and make it absolutely break even. And the latest position, which might be a tad under, that position I would give it the tightest stop, because by Wednesday afternoon, Thursday morning, you want to see this closer to, it's at 25.57. Z is the symbol, Zillow, Inc., real estate data. You want to see it closer to 26.11, 26.05 to 26.12, somewhere around there. If it can do that, I'd say, hey, that's much better. But the best is by Friday. You want to see this way above 26.60. I don't think you're wrong, because it looks like it has a lot of very good support in the doji candle low of 24.38. But I'm just talking about your money, the positions that you have, how to monetize your positions. And that would say, don't let your last position take too much of a hit, because that's going to make your average real bad. I'd sacrifice one position quickly.
Okay.
And keep the other two positions, because I think the other two are going to work. And then I would add the third position back only after it proves itself by getting close. 26.72 is a very important moving average level. If it can break above 26.72, I think it's going to be on its way finally towards trying to get towards the gap high of 29.19. I think you got the right idea, and I think your positions are pretty well placed. But that's what I would keep my stop tight on the last position that you got. Thanks for calling, Freeman.
I appreciate it, Baba.
Thank you. Folks, the Dow's only down 15, S&P's up 0.42, and we'll be back with Willie Nashua straight off this, and we'll be talking about a certain fruit. It isn't an orange. It isn't a pear. You tell me what it is. It starts with an A and ends with an
E. Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil's subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to check out Basil Chapman's newsletter, The Opening Call, then visit the front page of TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday, Wednesday, and Friday, 11 a.m. Eastern. on TFNN.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of TFNN.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi, folks. We've got Lou and Nasha on the line right now. Hi, Lou. How are you? Lou, you there?
Yes, I'm here.
Okay. Lou, you want to... Do you have a position in Apple?
Yes, I do. I've got some calls at 560 area.
Oh, so you're well in the money right now, right?
Right.
Okay. This is what I'm looking at. If Apple looks very, very good right now. I love the MACD and the stochastic. I am calling this a retracement rally. It doesn't make any difference. You're in the right position. This is what I'm going to say to you. If it breaks above 590, the round number high that was made yesterday, by 1 penny, do you have enough calls that you can start to take some off the table?
Yeah, I've got only 5.
Okay.
I've got 5.
All right. What I'm going to suggest is at the moment Apple breaks above 590.01, monitor it, and as it's moving up, which it should do, you can think of taking off 1. Just to kind of reward yourself, because the taking off the 1 will probably cover a big chunk of your original price entry point. Now, the next thing that I would do is I would look at 599, that whole 595 to 599 area. That's going to be the biggest resistance area for Apple as it moves higher. At that point, I would take off another 1, if you can do that. That's implying that it's going higher. The way I'm looking at Apple is because it's leg B, and so far the technicals are working with it. I think it should make a leg C and a leg D. So I'm going to suggest to you that you take off one, as I say, 1 penny above this peak B, yesterday's high. I would do that. Even that, if it does it today, it actually extends leg B, but that's okay. You want to reward yourself. The other thing that I would do is, the way I'm looking at it, I think this can go all the way into Friday. If the market holds up into Friday, I think Apple has a chance. My level that I'm looking at for Apple is resistance, very strong resistance, round about the 606 area, which is the 200-period moving average on the 120-minute chart. And so far, it's peak B in the 120-minute chart. I think it's going to go to leg C, and I wouldn't be surprised if before we have to make decisions about is Apple going higher or lower, that the 603 to 605 area will be hit. Congratulations. And you know what? Call me again maybe Thursday and see how you're doing. Okay?
Okay. Sounds good. Thank you.
Congratulations. You had a fabulous entry. Let's go to Mohammed in Glendale. Hi, Mohammed. How are you?
Oh, good. Thank you for taking my call, Basil.
That's my pleasure.
I was wondering if you could take a look at Nokia. I got into it yesterday at 339. It's been going down a little bit now.
Yeah, the 120-minute chart has just made a top, and it says it could pull back. But in fact, although I don't have to tell you, you're playing with, this is a stock that's gone down from the doji high of 42.22 back in 2007. It's just clear sailing all the way down. I think you've got yourself a balance. I think that this can go towards the 390 to the 420 area, and then I would just say, you know what? Take your money and run, or take at least 3/4 off and leave a little bit more. So this is what I'm thinking. I think okay. If it starts to break down on a percentage basis, that's a big drop. If it goes to the 9-period moving average of 314, that's 20 cents. But you know what you're doing, because you picked a real. This is bottom fishing, as you know, right?
Right.
So it's a gamble. Now, if you treat it purely as a gamble, I would say to you, if it gets back to if it goes about 359 to 360, I would take at least a half off, or maybe at least a third off, and I would raise my stop on the other half of the other position. I think this can go to 369 to 373, and it should do it within the next 3 to 4 sessions. So far you're okay. You know what, call me again tomorrow. Call me right at the beginning of the show if you can. Let's look at it again, see how it closes today, okay?
Okay, I will. Thank you so much.
Thank you very much.